Hey, how's it going? Tyler with Apex Trader here. Today we're talking about some very fascinating stuff because it's going to help you make money. And who does not like making money? If you don't like money, then I don't know what to really tell you. I guess skip on along, but we're going to jump right on into it. We are here talking about the EMA line. Now, what is so significant about the EMA line? It's the exponential moving average. You might be thinking, what is that? What does it do? And how can I incorporate it in my charts? And how does it benefit me? We're going to be going over all of those awesome questions that I know you have. So, with that, this red line right here is a 180 day. You can go up into your settings and customize this as a 180 day EMA line. That means that it is the last price of the last 180 days averaged out. That's how you get this line. That's why it's so far away from the candlesticks, because it's average price from 180 days. You might notice this white line. This is 30-day EMA. That means it's weighted average from the last 30 days. All right, so now that you got that in handy, the most important thing that you want to know is what time frame are we in. As you can see right down here, we are in the daily interval, meaning every single candlestick represents one day. All right, what does that have to do with anything? That means that you can come in here and trade stocks while working your job during the day. Yes, you heard me. I'm going to show you exactly how. You may notice that from here, we're looking at Snapchat, that it opened in 2017. It came out on the stock exchange and right away took off on a downtrend. Not really at all did it come up and bypass our 180 day, which tells us, yeah, it's on a downtrend. And you can tell from here all the way until down here at 482, 2 years later. Yes, 2 years later. And what happened just a few months after it bottomed out at 482? The most important thing you look for in this situation using the EMA lines is the crossover. This right here is called a crossover. This is a very, very important thing to watch for. As you can see, it happened over here, but it kind of tricked you out. So you got to really be understanding and mindful of what it can do. With that being said, you want to look for the crossover. Every time you get your 30-day come up and cross your 180-day, that is telling you I'm no longer on a downtrend, but I'm going on an uptrend. And as you can see from here, it did exactly that. Yes, so you're telling me that you could have bought right in here when it did the crossover at $9, $10. Yes, that is a great buy. That is telling you I'm going on an uptrend, and who doesn't like to do that? So as you can see, the very next thing we're going to watch for is what? When to sell. When do we sell? Well, you sell when it simply does the opposite, but it crosses over coming down, representing a downtrend. So let's go ahead. This happened in the beginning of 2019, and months later down the road, it actually is bouncing off of it and consolidating on it right over here, and is making a new high, and then, oh geez, what in the world? Why did that happen? Well, we had the crossover. Yeah, so you would have been in a nice position down here at the $9, $10 range, and I understand it went all the way up to just about 20, but you know, you're looking to really gain the full potential, because what if this would have bounced off of this and went up to 40? Then you would have been kicking yourself in the butt for selling at 20. But as you can see, it did the crossover right here at 15. So you just went from $9, $10 to 15 several months later, which is great for a swing trade. And so you would have been looking for, all right, I made a pretty good profit, but I understand how this stock trades now. It continuously bounces off when it is going on an uptrend. So you're going to be looking next for when to buy again. When is the next opportunity to buy this again to make more profit, to grow your account? And so we can look at it day by day And all of a sudden, you see it right here happen. Not only did it shoot up massively and broke it all at once, actually, it did what? It crossed over. It crossed over, yes. Right about $1 below where you sold at about a month ago. Now, you might be wondering, so what, I sold to a month later buy back in at the same price? Yes, but you would have not just let this money sit in your account for this entire month and a half. No, you would have went out and invested your money in this month and a half into another stock, doing the same exact thing. But instead of breaking it down, you would have been looking into it for breaking it up. And you would have came back, a month and a half later to check up, hey, how's it doing? And what do you know? Boom. Oh my God, excellent buy. And so you would have bought back in. And what is so awesome about buying back in after the crossover? Well, you're just looking for a chance for when to sell. So let's go ahead and watch it from this point where you would have bought in at, right in here at the $15, $16 range. And we're looking, we're watching. Oh, you see it coming down. But it did not at all come off and bounce it. Oh, we had this day. I was watching this day. It had massive news. That's why it had such a big gap on that day. And like I said, you're still in down here at the $15, $15, $16. And at this point, remember, you're just waiting. You're waiting to sell when it drops below. And what do we have here? Holy smokes. You're telling me. You are telling me. Hold up. I know. Stop. I'm in at $15, $16 because I followed the crossover on the 180-day and the 30-day EMA lines, and I'm now sitting at $73. Holy smokes! Where has this been at the entire time? Yes, I definitely could do this, look at it at least once a day to make sure it's not dropping below my 180-day while I go and work my job. And you would have made an extremely great profit. Now, I understand it is nowhere near bouncing off of our line right here. But, so let's see, this is up to the current day. This is current day right here. And so let's zoom in and really understand what it is that's going on. So as you can see, it's still not coming down, but to the EMA line fully, but it is coming down just a little bit. And the reason why is because we had a market correction. Overall, the entire market did the same exact thing. If you go and look at any single stock on the daily candlesticks, you see the same exact thing. But what we want to look for next is, as you might previously know, every time it made a new high, what do? You wait for it to wrap back around and break the new high. When it breaks the new high, you have it go higher. So it made a new high. All right, so let's check this out. It made a new high, and it made a pullback, and we're just waiting for it to break that same exact high again. And boom, right there, it broke the next high. And so it's going to go to the next price movement. So there we go, made a new high. We're waiting. Is it going to break 57.39? Boom, right there. Yeah, it really did. One day, boom. So we know it's going to go higher. Here we are. The very next high it made, 65.42. All right, is it going to break 65.42? Boom, sure did. Now here we are at 73.59. And so now we're waiting. Is it going to come back and break 73.59? And we're at the point of it's coming back up, and definitely could. It definitely has potential to come up and break 73.59. But what do we know if it doesn't? If you check out my previous videos, you will know exactly why. So if it comes up to 73.59 and does not break past 73.59 on the price, we have what is called a double top. It is one of my favorite trading patterns, as you might previously know. It is called a double top. What do we know about a double top? A double top is screaming at you, I'm reversing. And then you're going to get it to come back down and later on down the road, you're going to be experiencing the crossover of the downtrend. So we are in this area of you're still in the position and you're simply waiting for it to come back up. And if it does not make a new high, let's say it comes up to only $70 right here and then starts to go down. Well, if that happened, you would put in a trend line, and that is the start. You have your high point and the next point. The next point of price is going to be your trend line, and then that is a sell. Wow, I know that was a ton of useful information that I really hope you can go and incorporate the exponential moving average in your charts as a swing trade, so you can work while being invested in these stocks and making a great income that way. Now, if you want to add one more amazing indicator on top of that, check out my next video. We're going to go over the RSI, the Relative Strength Index. It's also a great indicator for telling you where to buy and sell. And don't forget to subscribe and like, and I'll see ya.